Hey traders, Raghee here, and we're going to talk about gold, a trade that we've been in for 4.5 days so far, and we're up right now $7,560. The trade is still open. There's still more upside to come with this trend. I'm going to walk you through how we took this trade. Now, first off, when we get into gold, what we're looking at is obviously playing the actual physical metal. That's what the gold ETF, GLD, is going to represent. And the idea is trusting your charts, knowing that when certain color candles happen, and for this case, I look for 5 top tier candles. 1, 2, 3, 4, and right here, 5. Interestingly enough, that was the first set of 5 candles we had that accompanied a trend. So take a look at the bottom of the screen here. Trust your gauges. This green over green is bullish momentum and a bullish trend. So I've got 5 green top tier candles and a trend. Now at this point, I'm looking for a dip. Now obviously there's been many dips along the way, so I'm going to talk about the most current trade that we have at this time of this recording. This happened 4.5 days ago, and the idea was to buy gold as it pulled down into, and this would have been Friday, just to give everyone some context, September 26th. So right in here, pretty recent, right? So it pulled back, and now what we're seeing is some really good follow through. So just to whet your appetite of how powerful these trends can be, I'm only talking about these number of candles along the right side, just the last 5 candles. We hit our first target in gold at $1,600 or $200 per gold contract. Each contract cost me $730 or $7.30. We scaled out here at a $200 gain. The next target, as this continued to move in our favor, I closed out at $59.60 for 8 contracts or $745. And at this point, you can see here, this is now a 100% return at just the second target with 2 weeks to go in gold. You can see we have a lot more we could go. That means I've got another 8 contracts that if gold continues to climb, we'll see more upside out of this contract. Well, one of the things that caught my eye, now that we know what we did and how much we're making, one of the things that caught my eye, and this is something that you can do, is understand the rotation of the sectors that are related to, in this case, the physical metal of gold. In this case, gold miners. Why was I looking at gold? Because for almost 1 month prior to the uptrend that I showed you on gold, gold miners, and this is the GDX contract, and these are all companies that mine, dig gold. They were already moving higher. So the gold miners were giving us a heads up that something's going on in gold. And when you track the sectors, you're going to be able to find moves like this. And this means that we already, for a full month before the move in gold, we're already trading and taking advantage of moves here, but we knew to keep an eye on it. And if you know how all these connective threads can lead you to multiple trades in a certain name like gold or gold miners, then it feeds on itself and it gives you confidence to say, hey, not only could I trade gold, but I could trade gold miners alongside that. So this is the trade right now that we're in. We still have an uptrend, and this is why I say there's a very high likelihood that this could continue.